I'm Ataman Ozyildirim, Director for Business Cycles and Growth Research at the Conference Board, and this is your Economics Watch brief for emerging markets for the month of October. Emerging economies continue to perform under external pressures on their markets. The fear of global trade wars, weakening currencies, and rising oil prices all prevail. In 2018, despite some strengthening in India, the economic outlook for emerging economies continues to moderate. Growth in industrial production moderated in China in July and August, and investment growth is on a steady declining path. The overall trends in the Conference Board's leading economic indexes suggest sustained weakness in Brazil and Mexico and further moderation in China. India remains buoyant so far, despite its external challenges. Weakening currencies make imports, especially imports of oil, more expensive. This adds to inflationary pressures and widens current account deficits in emerging economies. So far, there is no evidence that the export sector is benefiting from cheaper currencies in a meaningful way to offset expensive imports. In India, domestic consumption supports the outlook, but investment growth has declined in the second quarter of 2018. Maintaining fiscal prudence, addressing inflation amid continued currency weakening, and rising oil prices, and uncertainties about the 2019 elections all will be major drags on India's economic outlook. The recent truckers' strike has put a brake on Brazilian recovery from its recent deep recession. Amid rising inflation and eroding sentiment, consumer spending has also declined. Contracting industrial production, weak investment growth, and dropping export growth, along with political uncertainty over the October elections, adds to the slowing outlook in Brazil. Mexico is likely to gain some strength in the next quarter as the economic sentiment has improved after the presidential elections in July this year. Industrial production improved only marginally, and investment growth remains sluggish. The job market has improved, which is likely to support consumption going forward. And for now, the fears over a complete collapse of NAFTA have receded as Canada and US talks have resulted in a last-minute agreement. This bodes well for limiting the damage to Mexico's participation in the supply chains in North America in the medium term. I'm Ataman Ozyildirim, and this was your Economics Watch brief for emerging markets.